live stream. So we can stop it. Maybe for the once that video stop करके we can just stop and then you start it. That's it.
Good evening.
Hello everyone, how are you?
Oh, fine. Good evening. Good evening to everybody.
Very good evening, very good evening.
Oh, fine. Good evening. Good evening to everybody.
Very good evening, very good evening.
Oh, fine. Good evening. Good evening to everybody.
Very good All right, ladies and gentlemen, you want me to make you co-host? Okay. All right, ladies and gentlemen, yes, you want me to make you co-host? All right, ladies and gentlemen, yes, you want me to make you co-host? Can you put yourself on mute? There's a lot of echo. There's so many echoes. Can you put yourself on mute? There's a lot of echo. So many. Can I request everyone to please switch off your mics? Can you mute yourself, people who are online, because we have a lot of mics. Can you mute yourself? Vijayji, you can unmute. You can mute yourself. I think just please mute to begin with. Don't unmute because there's a lot of echo. You can mute yourself. I think just please mute to begin with. Don't unmute. Why there is no? I don't know. There's a lot of echo. It's all over the place. Why there is no? I don't know. It's a lot of echo. It's all over the place. Okay, I think let's start. And sometimes we have to live with not so perfect things. So okay, I think let's start. And sometimes we have to live with not so perfect things. So
Bhaskar sir, do you have your mobile also on and the laptop? Both you're online?
No, I don't have.
But the echoes are coming.
What I would request. So what I would request, Rajanji, is that you can also put this thing on mute.
Yeah, mine.
Okay, I have switched off my phone just to be very, very sure. I think we are better now, yeah? That was a very good idea. So once again, a very good afternoon, and good evening to everyone. So in order to save time, we are already about 2 minutes late. We have a number of people here who are here in person. Welcome to everyone. And these are the ones who are going to have high tea after tolerating me for 2 hours. So they have something to look forward to. But people who are online, you have to rely on your own homemade stuff. Maybe that's better. All right. So I'm going to put on my screen right now, share my screen with you. Can someone confirm that you can watch me? You can see my screen?
Yes, we can.
Yeah, you can. Okay, fantastic. All right. I'm not going to be talking too much about who am I and what do I do. Some of you know me a little bit. I am of you. I am part of the MNOA. I've been life member for many, many years. I'm the fellow of the Institute of Marine Engineers. And I remember being an AMIE. I'm not very sure afterwards whether I became member of the Institution of Engineers. I leave it to Captain Commodore Bhandarkar to make sure I become a member. All right, just a very quick disclaimer. If you make money out of learning or listening to me today, I'll give you my account number. You can share it with me. But if you lose money after listening to me, it means you haven't paid attention, or maybe you applied it in a wrong way. So I shall not be held responsible for that. All right. Trainer's background, there is nothing to write home about. So we'll quickly go ahead. So just to start with the global seaborne trade and dry bulk, I've just got 2 or 3 slides on this to give you what actually is happening around, because we have somebody here who is quite a lot interested in all these, what has been happening in terms of black swan events and all that. And we were still struggling with Russia-Ukraine issue, and now we have another one that has come up, which might flare up. I'm talking about the Middle East matter. So as far as the order book is concerned, we are historically low, which is just about 7.2% in terms of number of ships which are on order. Environmental is another big issue that we have this year onwards. And as you all know, in the previous MEPC meeting, there are few requirements with regards to 20% and then strive for 30% reduction by 2030. And everything has been brought forward. I'm very happy about it. I don't know whether other people are happy about it or not. This is the first time our industry has taken a very, very proactive role, that we are, even though we are just about 2.7%, 2.8% of the global greenhouse gas emissions, but still we have to take steps. If we don't take the steps, just to tell you that by a few decades, 2 or 3 decades, it's going to be 17%, 1-7, not just 2.3% or 2.4%. And even though in terms of percentage we are very low, but in terms of the when we talk about billions of tons, it's close to 1 billion tons of CO2. That is what we pump into the atmosphere annually. And if shipping was a country, we would be the 5th largest polluting country in the world. So let's not rest on our laurels and say, oh, it's just 2.7%, so what? It's the most economical and the least polluting industry. We should not think about that. Then the geopolitical macro issues, Russia, Ukraine is one thing. China, if you have watched the news today and yesterday, President Xi Jinping has said that he's going to do whatever it takes to make sure that Chinese economy comes up and doesn't go down. And that's something. So in general, apart from the geopolitical issues, if we just look at the economical part, people are taking steps and actions, and I don't think that we have much to worry about, provided the Israel and Gaza Hamas issue gets resolved. In terms of global seaborne trade and bulk, just to give a very rough idea, especially to those of my friends who are online and who are in the universities, just to tell you, dry bulk is almost half the entire seaborne trade volume, which is about 45%. And that consists of the iron ore is 28%, met coke, which is used to produce steel, is quite a lot percentage. And then thermal coal, which is for energy, which produces steam, is 22, both of them together, coal as a whole. So in other words, we can say 50% of the 45% is one country and one product. One country is China, because all this raw material mainly is going to China, and then steel is coming out. So dry bulk is very sensitive to China. If China sneezes, dry bulk market catches fever. So that's a very, very big problem. And if China puts its foot on the pedal, on the accelerator, the dry bulk market goes up. And if they remove it, dry bulk market comes down. And this is what we have seen, especially in terms of thermal coal, which is quite important. China produces close to 3.6 billion tons of thermal coal every year, but it consumes a little bit more than that. And the import is just about 5% of what they produce, just 5%. If they decide to take another 5% from Indonesia or RB1 from South Africa or from Newcastle or whatever, then suddenly there's a need for 70, 80, 100 ships, and the market goes up. So that's just to give an idea to my friends who are listening to us. So the impact of Israel and Palestine war, this is from Reuters on the 18th of October 2020. I tried to look for any on it today morning, but I couldn't find. This is the last one I have when I was teaching in Gujarat Maritime University on that same date, on the 18th of October. What is this? Outside. Okay. Now, whether it remains within that area, that's what we are saying in Middle East, and then it is brought under some sort of control, we would be very lucky. But the way things are with Iran and what US is looking at and Russia, Mr. Putin has said something, if it is going to go beyond that, we would have a lot of impact. And India being an importer of oil, majority of the oil is what we import. And the rising price in oil can create big problem for us. And especially when the 5 states elections are coming, and next year we got 2024 general elections. So that could have a reverberating impact on our political scenario too. So let's all hope and wish that good sense prevails and these things don't happen. Now, coming back to the topic of the day, which is shipping and ship finance. Shipping is a highly capital intensive business. So just to give you an idea, this is, I have not changed these slides. Last time I made these slides was on my birthday. So to tell you, 25th September is when I was born, 64 years ago. So it's from Clarkson's, I have taken these reports. So you can see the price, how high these prices are. The resale value is 125 million. Resale basically is the brand new ship, which is just coming out of the yard, or even when it is under construction and it is sold. So, and if you look at the first figure for VLCC, $128 million is the new building. But the delivery of the ship is going to be after 2 years, 3 years, so 2-3 years. So the next one is 98 million, which is 5-year-old ship. So this is how the presentation is. So 128 million is the new building, 98 million is the 5-year-old, and then resale is 125. Sometimes you will find the resale value is more than the new building value. If you look at the Suezmax, 160,000 tonner, the new building is 85 million, but the resale is 90 million. Can I ask someone who is sitting here, what could be the reason? Why is the resale value more than the new building value? Can you just pass the mic there? The market demand and supply is a very general explanation, but give me specific.
To get into the details, then this is not an Uber model wherein your asset depreciates over time. Such is the market demand, or such is the scenario of shipping, that the asset value can even appreciate over the years, given there's a loss in supply. And then the oil pricing is also the consideration.
Okay, I'll give you a simpler answer. That's to a large extent, you're right. If I'm taking a ship right now in my hand and ship starts making money and good money, then what will happen? The resale value will be more than the new building value, because new building is you're going to get the ship after 2 years, 3 years, 4 years. All right. So whenever the present market is good, that would be the time when resale value would be more than the new building value, because that's the investment you're doing today to get the vessel later in your hands. And if you look at the dry bulk, you see resale value is less than the new building value. Now, this is 25th September. Let me tell you, today is 27th of October. A lot has changed in Capesize market. A lot of things, it's more than doubled now, the freight rate. All right, so things have changed after that. But the reasoning still remains the same. If the today's market is not so good, the resale value would be low, new building value would be high. If today's market is very good, the resale value would be high. So this is just to give you an idea with regards to the amount of money that the ships take. If you look at an LNG vessel, 174,000 CBM, it's 265 million US dollars. All right. And similarly, if you see these big container ships, 23,000 TEU, 20 equivalent units, it's 229 million dollars. So it's quite a lot. So let us say, for example, we had somebody left us a lot of money, and we discovered it now that we got some $500 million US dollars with us, and we decided to start a shipping company with a fantastic, lovely portfolio, which is there on my screen. So this is something like 2.3 to 6 billion US dollars. All right. So a portfolio like this is almost 2.3 to 6 billion dollars. Now, what are you going to do? Even if you have $500 million of your own, would you be investing all that money, your own money, into it? No, you won't. First of all, $500 million won't buy you this portfolio, even if you wanted to dig deep into your pockets and get that money out. Yeah. So what do? You go to the market. So before we go to the market, and before we talk about which market, yeah, and how much we will get, and what would be the interest rate, what we call the spread or the margins the banks are going to charge, let's quickly look at the characteristics of the ship finance business. It is very different from buying a plot in Mohali or two canal thing in Sector 8. It's very different because these things are there. You can go there every morning, have a look, yeah, and look at your name outside the door and come back. But on the ships, it's very different. It's all over the place. So the international nature of the shipping, that is something we have to keep in mind. One example could be that an owner in Singapore buys a 5-year-old Supramax from a Japanese owner, takes loan from a European bank based in Hong Kong, fund transfer takes place in Tokyo, and the ship has got a crew which is a mix of, let's say, Indians, Filipinos, Chinese, Ukrainians, Romanians, Russians, could be anything, right? So all of them come from different jurisdictions. They may have the contracts with different agents. Then the ship may be having a COA to carry, let's say, iron ore from Brazil, right, to discharge in China. So the shipper from another jurisdiction, receiver from, so shipping is very typical of international nature. There are a few more unique characteristics. One is the capital intensity that we have seen, right? And then volatile environment. I hope everybody remembers 2008. What was so great about 2008? We used to call it GFC year, Global Financial Crisis year. So Beijing Olympics also took place in August 2008. And after the Beijing Olympics, there were some signs which in my previous birth, in my company, we could read it very clearly, especially my boss could read it very clearly. And we decided to get out of the market, sell everything that we had, all the paper and everything. That was the time market was pretty high in middle of 2008, beginning of 2008, end of 2007. And then by the end of 2008, market crashed by 98% or 99%. It was like you take a hot knife and cut it through a block of butter. The way it will go down, that's how the market came down. It came down vertically down, okay, almost 98%. So in general, you would find that Capesize almost like 150, 160% volatility. We call it vol. Or if you want more on the statistical language, it would be, we can say, the standard deviation. So as the size of the ships reduces, the volatility reduces, because the employability is more, because types of cargoes you can go carry are more, ports that you can go are more. So the volatility is less. But if you can manage your business properly, then of course you want the ships or the business with high volatility, if you know when to get in and when to get out. All right. The other thing about our ships, and before a lender thinks about giving us money, is he would say these are mobile assets and they trade worldwide and they are subjected to different jurisdictions. I always say the flag of the ship is like the passport that you carry, right? And port state control is like the visa that you have. You go to place and you have to fulfill their requirements. So that part, keeping in mind, it shows that different jurisdictions we are going to, the shipping is exposed to all that. And then another very characteristic thing that we have is the wheel of incorporation, or the corporate structure. Now that may result, things have been changing. I'm not saying that it's the same old style that nobody knew who the beneficial owner was, but over a period of time, definitely things have changed. But still today, the lender, he doesn't get that sort of information that he would like to have. So insufficient information is a problem. Then the ships are under the SPVs, right? Special purpose vehicles or special purpose companies. You do not want the liability of one ship to go on to the other ship. Of course, you have jurisdictions like South Africa, where you have the sister ship effect and things like that. But still, for a lender, these are the things to remember. Then there are multiple and cross holdings between various ships. So in other words, if you are a lender, you would be a little bit wary of entering into shipping. And this is what we saw after global financial crisis. Most of the Western banks, they started pulling out. They started to sell their shipping portfolios. Banks like Royal Bank of Scotland, RBS, or HSH Nord, or the Commerce Bank. So number of banks, they started pulling out, the Western banks especially, because they didn't want their portfolio to be concentrated towards such a risky business. Everything was okay before that. They were willing to give you even your working capital, in 2007 and 8. Oh, don't worry, we are there for you. We'll give you all that money. They would even give you money to buy ships, Capesize, for $85 million, where the break-even comes to about $33,000 per day for the next 25 years, every day. Do you think anybody in his right mind would say that a ship can earn $35,000 for 360 days every year for the next 25 years? Of course not. Of course not. But the euphoria is such. We will come to one of my teachers, Professor, what's his name? Nikos Papapostoulou. He wrote a paper. I'll show you a graph from that. That's quite an interesting one. Now, aviation is one business that comes very, very close to shipping, in terms of capital intensity as well as the way it is financed. So both of them are capital intensive, they're expensive. Lease in aviation, it is quite extensive lease, but for shipping, we would find that dry bulk especially is more towards owning. But when you look at the container ship, that again, because of the costing and it's more to do with the leasing. Manufacturers, aviation is very simple. You got Airbus and Boeing, whereas in shipping, you got hundreds of shipyards. All right, there are different shipyards. Then specifications, relatively, as far as aviation is concerned, it's quite limited. The specifications are, you have got 737s and 787s. There's a limit to it. They are limited. But in shipping, you got so many different types. So in other words, for a lender to look at your product, which is going to finance, he needs to have good understanding. Where is the ship coming from? Which country, which shipyard, tier 1, tier 2, what type of engine, etc., etc. So you need to, that's a basic difference between the aviation and shipping. Now let's quickly look at some sources of ship finance and trends. I would request someone to just do knock knock when I do finish 1 hour, so that I'm aware where am I in terms of my subject matter. So let's look at the sources of ship finance and trends. As I already mentioned, that what has happened during the global financial crisis, so I will not spend too much time on this part, neither this part. So let me straight bring you to 3 major areas of financing, right? One is the debt. Now, this debt could be 2 types. One could be simple, taking money from the bank, or you go to the debt capital markets, all right? So can someone give me an example of debt capital market? What do you do? Where do you go? What do you raise? Anyone? So what exactly is debt capital market? Stock market would be equity capital markets. Yeah. These are the bonds. Absolutely. These are the bonds. And for shipping, especially because shipping is a very risky business, so the return that the investors expect is very high. So we sometimes call them HYB, high yield bonds. All right. So these are those high yield bonds. Then comes your equity. I'm leaving leasing for the time being. Let's jump right on the right-hand side. That's the equity part. So in equity, again, it could be one coming from your deep pockets. Yeah, especially if you're a traditional ship owner like the Greeks who have money to buy ships when the market is down and the banks will not give you anything, because banks will look at your future cash flows and nobody knows where the market is going to be. After 1 month, 2 months, 5 months, 1 year, 2 years, as we saw in 2015, 16, 17, right? So one could be your own money. And second thing could be like you raise money from the market. And that is the equity capital markets. Somebody mentioned about equity capital markets, stock market. So you're going there with your IPOs and follow on, you get into the market to raise money. Then comes your, of course, the leasing part. Leasing is when somebody else owns the ship and gives it to you, because that person who has leased the ship to you doesn't want to take the risk in shipping. He is a risk-averse guy, but he would like to have money, and he puts all the risk on you. This is something what we call is hell and high water. These are hell and high water lease where you as the bareboat charterer assume all the risk. If there's a breakdown on the ship or whatever happens, it's the charterer's responsibility. The financial institution or the lessor, it could be a bank, it could be a shipping investment guys. So all they want is, they just say, give us so much money per day. That's it. Yeah. Rest you take. Even their own insurance, you have to pay for it. All right. Owner's innocent insurance, you have to. Anything that is to be paid for making that deal has to be counted towards calculating the bareboat hire. Very simple. But here there is one thing which is quite interesting. Now I'm taking things from forward because I'm not too sure whether I'll be able to cover everything. So the important things I'm just bringing in wherever it comes in my mind. Let us say, for example, new regulation, all right? And we say that the lease duration is 10 years. Now, if you're going to install something towards the meeting of the new regulation, the benefit could be beyond 10 years. So it means once the ship goes back to the lessor, he is going to get benefit out of it. So he needs to pay that much proportion of it. So in the BareCon, which is the BIMCO charter party for bareboat lease, you would have these options, these clauses, which are provided for, all right? Whether it's for the remaining life of the ship or it is only during the charter hire. So there are 2-3 different options which are provided. So accordingly you negotiate and you enter into this sort of contract. Okay. So some of it I've already spoken about, so I'm going to read very quickly, and wherever I have not touched upon, I will talk about. Plain vanilla loan, I have talked to you about. So whenever in finance we use, whether it is derivatives, options, or we talk about ship finance and we say vanilla and flavored. So there is a very simple meaning. Vanilla means it's a straight, simple, straightforward. Go to the bank, take the money. That's the vanilla loan. All right. Then you have the syndicates. Let's say, for example, the portfolio which we looked at, 2.326 billion US dollars. You think one bank can take over that much of exposure on their balance sheet? No. So there would be someone who will take a bigger chunk. So that becomes my lead bank. And that bank is going to then get 2, 3, 4, 5 banks along with them and make a sort of syndicate. And they will lead the negotiations of all the terms and conditions. And that is how the syndicated loans will come into existence. Debt capital markets, as Tipsy mentioned very rightly, that's bonds. Then you got the ECAs, export credit agencies. Recently, there was London Maritime Week in September. And their shipping minister, maritime minister, she's a lady, I'm forgetting her name. She's Pakistan origin lady, yeah. And she talked about how UK is, and even Canada. I mean, these are the two, especially the countries that I remember. I know that they have a lot of ECA. They give you that sort of loan in order to promote business in their own countries too. All right, China does the same, but they may not call it by the same name, they're different name. Then you have the equity financing, owner's capital, those deep pockets I talked about. Then you're shipping funds. Now, these could be the provident fund guys or the insurance fund guys. They would like to invest in it. They may not like shipping that much, but as with the portfolio approach, what happens in a portfolio when we, your own investment, when you look at, okay, put some in mutual funds, put some in equity, put some in debt, right? So similarly, all these funds, they would like a little bit of this asset, little bit of that asset. So shipping assets, a bit of that is part of that big portfolio, all right? Then you got the equity capital markets, the IPO as we talked about, then private equity. Let's say if Ajit ji has got some $200, $250 million. He might say, okay, we give money. I'm Jigmeet, I'm going to give you money to buy, but I need 18% return on my money. So the private equity guys are the people who give you the money, direct lending they do. All right. Then you got German KG and the KS companies. This used to be quite popular before, but not now. Then you have the mezzanine financing, which is convertible sort of arrangement, debt into equity and things like that. That's more of a hybrid thing. Then there is something quite interesting called MLPs, Master Limited Partnerships. In the Master Limited Partnership, you have a general partner, you have limited partners. It's more to get the benefit of tax benefit that they get. And the general partners, they make decent money out of it. And limited partners, basically, they make money out of it. Of course they do, but they may not have a say in the running of the company. All right. They may not be on the board. So in other words, as far as the governance is concerned, compared to a public listed company, an MLP would be riskier because the governance would be quite limited. All right. Now, if we compare from earlier, let's say January 2022, where the LIBOR was not LIBOR, let's say the US Fed rate was 0.5% to today about 4.3%. So this sort of increase, plus the banks, their margins or the spreads, the ship finance has become very, very expensive. Keeping this in mind, and also keeping in mind the decarbonization and going forward in the next few years, the ships would need to be replaced. And present order book is quite limited. and population is increasing. We have already last year in November crossed $8 billion. Sorry, 8 billion people. I'm talking like Rahul Gandhi now. Yeah. So 8 billion people. And then by 2030s, middle of 2030, it would be 9 billion. And 2050s, we are talking about 10 billion people, number of mouths to feed and the dreams to fulfill. So the demand is going to continue to increase. So the money required into shipping would be quite a lot, right? Now, if you look at the debt characteristic, of course, you have to pay the interest, which I just mentioned, and debts can have different levels of securities. If somebody gives you, if say, going back to Ajit, is $250 million US. I've got my eyes on his $250 million. Now, if he's going to give me 250, let's say $100 million, he would like to know if something happens to my business, what happens to his money. So he would like to have security, right? So I'll tell him, okay, all my ships I'm going to mortgage to you. Is that sufficient? No, it's not. He would like to have corporate guarantees. He would like to have cross collaterals. He's going to have number of other things, right? So the security is very, very important. So just the ship mortgage is not sufficient. So why do the owners do it in terms of debt? The owners do it because debt is cheap than the equity, right? So let me give you just very rough example. If my project IRR, so I'm not sure how many people understand this IRR thing, it's the internal rate of return. If I calculate my cash flows, the future cash flows, and discount them with a particular discount rate where my net present value is 0, so that discount rate is my IRR, is the internal rate of return. So let's say my project IRR is say 15%, 1.5, and my debt is 10%, right? And debt equity ratio is, let's say, 80-20, 80% is debt. So on that 80%, and the amount is say 100 million. So for 80 million US dollars of debt, I'm paying 10%. Overall on 100, I'm getting 15%. So for that 20% of my equity, I save that 5% on that 80%, plus I'm getting 15% on my 20%. So my equity IRR could be huge, right? Everybody understands that? So if the debt is cheaper, my equity IRR will go up. So that's very important. So why do the lenders give? They also know that you're going to make a lot of money out of their debt. The lenders do it because they are in the business of lending money and they want security. That is why the credit risk is very important. So I wanted to emphasize on the credit risk. It's extremely, extremely important. You need to see if the other party, whether it is credit worthy, right? Whether they will keep their promises, whether their cash flows are tangible and realistic. The people they do business with, their charterers, are they credit worthy, right? Do they have relationship with steel mills, power plants, things like that? So that security is extremely important for a lender. They will, better the security, lesser would be the margin they will charge, the cost of capital that they will charge. That would be cheaper. All right. All right. So let's leave this high bond. I'll just say one sentence here. If you're going for listening to Tipsy and buying shipping bonds, then just make sure that you buy good quality bonds. Yeah. If you look at this again, my professor from Cass Business School, Professor Sir Kostas Graminos, his paper. So all issues, 50 issues, 13 defaulted, 37 did not default, so 76% successful rate. Not bad, but that's because of those BB plus and BB minus total BBs. But rest of it, if it is CC, if the rating is C, junk bonds, then that's a very big problem. Okay. So after this GFC, global financial crisis, this is what has happened. The banks have become very, very cautious. They have become more like relationship driven, cash flows driven. They want to be very sure that the money that you're showing them on the paper is something which is going to materialize. And also, the shift finance, one of the contemporary things is shift finance is shifting from west to east. All right. Now, this is very interesting point here. When you say west to east, as earlier I mentioned, the Western banks, they are moving out of this risk. All right. They're still coming back. It's not that. If you listen to the most recent Marine Money and Capital Link, their discussions and panel discussions and speeches and the graphs and the presentations, you will find that there is interest, especially if there are companies who are more aware of the Poseidon principles and the ESG, which is environment, social, and governance issues. So if you are more quality company, they are there to give you money. Yeah. But in general, I would say that over a period of time since 2008, shift finance has been shifting from the west to the east. So when we talk about east, you're looking at China, Japan, Korea, and especially with regards to leasing, is the Chinese leasing companies that have been doing pretty well. Even today, they are doing pretty well. Now, the model works very interestingly there. Most of the Chinese leasing companies belong to the Chinese banks in general. There may be few which are not part of the bank, but most of them are part of the banks. And in China, these banks are government banks. They're government-controlled banks. So there's a sovereign rating there. So the risk is quite limited. So these Western banks who said they are not going to invest in shipping, they invest in these leasing companies. So that is the back-end finance. Yeah, the back-end finance, which these leasing companies, Chinese leasing companies, which are the government companies or very low-risk companies, they get very cheap finance from there because risk is less. Then these leasing companies, they evaluate, they do their due diligence on the investors, on the ship owners, or anyone who would like to buy a ship. So if they are satisfied, then they, depending on the credit of the client, they are going to charge them the margin, their cost of capital plus the margin. The cost of capital is low because risk is low and the Western banks are interested in giving it to them. And overall, if you see, they are able to generate the business. And traditionally, these leasing companies have been more in infrastructure, property, aviation. So shipping has been a way of diversification for them. So what I'm telling you today is not a new story. All this started from 2011 and 12, and it's become more on a maturing side presently as we see it. But that is how the Chinese leasing companies came in to fill up that space which was vacated by the Western banks. All right. So this part is clear, I think, to everyone. Equity sources, we already talked about it. It's the public equity investors. These are your IPOs. Private equity investors, like $250 million with a GG. So, and then you have the leasing companies, as I explained quite a lot in detail. So what are the characteristics of equity? Number one, the down payment is on the house. If I am a lender, and let us say sir is buying a ship, I would like to see whether he believes in his model or not. How would I make out whether he believes in his model? If he puts his own money, right? He must have his skin in the game. If he says, okay, don't worry, I'll put 30% of my money in it. I have total trust in the business that I'm proposing you to invest in as a lender. So I'm going to look at it. So that's very, very important, right? Equity is also the first loss source of capital. If a company loses money, who loses money the first is the owner. And that owner could be including us who have bought the shares in the share market. So we all lose money first. What about the debt guy? He doesn't lose the money unless the company goes bankrupt. Then it's a different matter because the debt needs to be paid first. And equity is, if at all something is remaining, that's where the equity guys will get it. Okay. This one we talked about quite a lot already. So mezzanine financing, as I said, this is the hybrid of equity and debt financing. So basically, it is a debt capital and giving the lender the right to convert into ownership or the equity interest in the company. When does that happen? When the debt is not paid back in time and in full. So that is something you're offering it to the lender as a sweetener, that you can take over the equity part of it. All right. But one thing about mezzanine is that it is subordinated to debt from senior lenders. Can anyone explain this sentence to me? What does that mean? Subordinated to debt from senior lenders. So first question is, who is a senior lender? Let's look at step by step.
So the Western banks you were talking about, they're the senior lenders and then they are government Chinese.
Yeah, give some example step by step. Let's say 3-4 lenders. So you give the hierarchy of the lenders, and then if you can explain for everyone.
Basic. This one is a senior lenders we are talking because the American Western lenders we have. Can you hear me?
No, it's not very, very good. It's not only me hearing. I would like the people who are on Zoom to also hear.
Government? Yeah.
Government.
Government bonds?
Let's say you have bought a ship. Let's say you have bought a ship. You have taken money from the bank. All right. Majority of your money you have taken from the bank. So bank is your senior most lender. All right. In addition to that, if you're taking money from other people, they are subordinated to the bank. All right. So who gets paid first? The senior lender. So it is that particular hierarchy which needs to be followed. The senior most guy gets his money first, then the second, then the third, like that. All right. Okay.
Consortium of the banks, like the you should mention.
Syndicate.
Yeah, syndicate. So do they get priority over the other bank?
Now the syndicate is the bank itself. They are the group of banks. So it's not that you have a bank and you have taken the debt from them and then you're following it with the syndicated banks. Normally it is not the case. But if it is a case, let's say a hypothetical situation, then that first bank, the senior lender, would get paid first. And then the syndicate, they can get the piece of the little bit pie, whatever they may get. Yeah? Okay.
Something like contract and subcontract.
Something like a very crude example, but chalega. Yeah. So yeah, contract and subcontract may be more like a syndicated to some extent, but not exactly that. Okay. All right. So treated as equity on balance sheet, but thus advantageous from capital structure point of view. I'm going to tell you leasing. I mentioned a little bit, but I'll give you the structure now. First, I told you why it happened. How the leasing happened, right? When the Western banks moved out and this leasing started, they could get back-end financing. Then they did due diligence on their client, and then they got good margins on their cost of capital. So that is how it started. And the Chinese leasing companies, they wanted to expand into, they wanted to diversify their portfolios. Apart from infrastructure and aviation, they also wanted to come into shipping. So this part I explained to you. Now let's see how does it work and why does it work. All right. How does it work basically is, I'll give the example of, let's say, freeing up the capital. For that, I'll take, who would like to be a ship owner here now? Okay, here, Iqbal. Okay, Bala. Let's say Iqbal has got 20 ships. All right. Now, those 20 ships, 10 of those ships are debt free. Let's say there is no debt. It's fully paid, fully paid. 10 of them, okay, they have got, let's say, 40%, 50% debt. So he's been earning money. He's been in the business. He has seen those 2003 to 2008 super cycle, and he has taken the right decision, not ordered the ships in 2007 and 8. Okay, so he's been a very diligent owner. Now he feels that going forward, the market is going to go up and he needs to get money, release money. So how does he release money without controlling losing the control of the ships? Because he's got COAs in his book. He's got a lot of cargo. So what he might do is those 10 ships where he doesn't have any debt, he might sell those 10 ships to a lessor, to a bank, let's say. Bank, I'm just taking as one example. He's selling it to them and then chartering them back, bareboat lease back. So let us say the bank tells him 30% you still need to keep in. I'll give you 70% of the market value of those ships. Let's say each of these ships was $30 million, 30. These are nice big ships. So $30 million. So every ship he is releasing $21 million. 10 ships, $210 million. And he's got them back on bareboat charter. Nothing has changed. Nothing has changed. His crew is there. Everything is there. It's only on the paper. All this thing has been done. He's got $210 million. Now, keeping that $210 million and saying that 30% I'm going to pay. So that $63 million he deducts from there as his capital, and rest of the money, again, he can sort of invest back in to buy more ships, isn't it? So there is a way to release the capital and invest money and increase your business, especially when you're seeing the direction in which the market is going. So this releasing capital was one of the motivating factors. And then the other thing was, let us say you have cargo. As Sir would know, we always used to say, including his batchmate, cargo is the king, right? So cargo is the king. So if you have the cargo, maybe there is a time you would like to have good control over the ships, especially where the ballast distance is not more. You might look at shuttle voyages, buy the ships, or do the bareboat lease of the ships, give it to fleet management to manage those ships, perfectly fine. And then you do the business using those ships. So it works out quite well. So there are many different ways of making use of the bareboat system. Okay. So it's not that the Chinese leasing company just give money to anyone and everyone that, without doing due diligence. They have become very smart now. So there is definitely a lot of due diligence that goes on. It's not easy money, but still there is a possibility of doing it. All right. And especially when the regulations have changed, when we talk about RC, which is the IFRS, International Financial Reporting Standards, 15, 16, when we talk about that, there, you cannot be having these leases to be termed as operating lease. But in some of these jurisdictions, you can still call them as operating lease and not as the financial lease. Does anyone, I talked about it in one of my previous lectures about operating lease and financial lease. Does anyone remember? Would you like to explain? Anyone? What's the difference between operating lease and financial lease? Otherwise, I will remind you from an example from Professor Aswat Damodaran from the Stern Business School, New York University. That was a very lovely example. I'll tell you that example.
Give us the example.
I'll give you the example. So his son wanted to go and watch the American football match. So he took his son. His son was very happy, jumping up and down, enjoying the match. Whereas Professor Damodaran, he's looking at all the players and he's doing his calculation, looking at the operating leases each of the player has got with their respective clubs. And the total was humongous money, loads of money, and they were all operating leases. So when he went to their website and saw the balance sheet, none of this liability was there on those balance sheets because they were all operating leases, mean they're part of the P&L and not of the balance sheet. So when these things are not on the balance sheet, as an investor, let's say you are a common investor, and would you not like to know the risk associated before you go and buy the shares? You would like to, right? So that is where all these things like Basel 3, 4, everything started coming in, IFRS 15, 16 started coming in, that you have to declare this. So as far as the IFRS 15, 16, when we are talking about anything which is beyond 1 year charter, it must come onto the balance sheet. That is as a financial lease, not as the operating lease. So that's so it's made life a little bit difficult compared to before, but in some jurisdictions you can still do operating lease who do not follow the international financial reporting standards. Okay. So tool for extracting equity, we already talked about Tipsy's 20 ships and 10 were debt-free, how we took out the money out of those. Master limited partnerships, I discussed quite a lot in detail. The tax benefit, and you have a general partner and you have a limited partner. So that's quite an interesting thing. One of the examples of MLP was the Scorpio bulk and tankers at some point of time. So this is quite an interesting concept where you can have various transactions, and there the money will come in to the general partner as commissions. All right. So how does it work is the general partner only gets about 2%, what we call the IDRs, incentive distribution rights, right? To encourage the general partner to do better and better. So this 2% can become up to 30%, 40%, 50% of the total profit. And rest of it will go to limited partner. So as you do better, you get more percentage, not just in absolute terms, but as percentage also. So your total money that you make out of it is quite a lot. All right. So then what happens? The risk taking is far more. So limited partnerships, because of the less governance, could have that part of disadvantages. But from the tax purposes, it's quite beneficial for the limited partners. So one of the reasons why this has come. Now, if you look at this one from a few years ago, this is not very recent one from Marine Money. Over a period of time, we have seen the common equity has been increasing. That is the IPOs, the public offerings have been increasing. The bonds have been increasing, and the traditional loans have been coming down. Now, this is from Dr. Martin Stofford's Maritime Economics. This is quite interesting. Value creation and value destruction. Rather than explaining this to you, I would rather explain this one to you. So this one, have a look at this. Do you see that vertical line which comes down? In 2008, December, from top here, let me take my arrow here, and it just came down 99%. Yeah. So that is what happened to the market then. Now, this one is, I was talking about Dr. Nikos C. Papapostolou's, he was teaching me in CAS Business School about 7-8 years ago when I was doing my master's in ship finance, energy trade and finance. So quite an interesting one. And one example is like when the market starts to go up. So there's a lot of optimism. So one example I give is of Hong Kong Club. Let's say a group of Hong Kong ship owners, they meet in the evening at the Hong Kong Club. All right. I know I'm being broadcasted live on the YouTube, so I don't need to take or would not take anybody's names. But say people get together, or let's say in Marina Club in Piraeus. Okay. So the Greek ship owners, I doubt they are listening to me. So they will all get together and market is going up. They are smiling, ordering nice, expensive wine. And then market continues to go up and up. The size of the smile keeps on increasing. So which actress has got the biggest smile? The old people here would know. One of the Indian Bollywood actresses, the biggest smile. It could go from here till here. Do you remember Nargis? Yeah, Nargis, that smile was quite broad smile. So that Nargis, so that Nargis smile would come when the market is going up and you have gone to this part, which is called thrill. And from thrill, when the market continues to go up, then there is a euphoria. Wow, just can't believe it. It's fantastic market. And they start believing that it's going to remain like this forever. Yeah. And the order shifts. And the banks are more than happy to lend them money. The reason is because the earning is also very high. So within 1 year, you can recover a large part of the ship cost. So it's not that it's a foolish act to do that. It all depends whether you're on the right side of the market or not. So when you're right on top, that euphoria with that Nargis smile, and then the market starts to come down a bit, then you're in a state of denial. No, this can't be happening. So this is temporary. Cheers. So they'll do cheers and say, this is temporary. This can't be happening. And they will justify it, giving a lot of reasons. Oh, it's because of this and because of that. So they'll basically justify it. Then market still continues to come down. And then there is a little bit of fear. Really, it's happening. Market is coming down. They start to get very worried and it goes down further. Then there is pessimism comes in. Now what? Now what do we do? And it keeps on coming down. Then there is panic and some people would sell the ships. Some people would say, let's sit on our losses. Some would dig into their pockets and see that how much money they have to last the trough, so that when the market goes up, market has to come up again, right? It has to come. It's a cyclical market, always. But sometimes this happens. The market doesn't come up very, very quickly, right? In 2016, if you saw, 15, 16, 17, that time, market did not come up very quickly. It stayed there for a long period. And in the Q1 and 2 of 2016, it went below the low, all right? And the asset values came down. And that is the time to invest. If you see this graph, there is something written at the bottom of that red curve, point of maximum opportunity. So when should you be buying? When the asset values are lowest. But you need something to buy ships. You need money. And you go to the bank. And the bank says, no, I am not giving you anything. Show me the cash flows. The poor guy can't even pay for his OPEX. And you're asking him to show cash flow. Even if he shows the cash flows, he would say, okay, you have to prove it. What are your assumptions? How do you validate your assumptions? You can't. So who buys ships at this time? Only those who have money. The Fujian Chinese ship owners or the Greek ship owners, or some of the German smaller Japanese, some of the Japanese. So they buy ships at that particular time. And within few months after that, market started to recover, started to go up. And then the gloom becomes hope, and the hope goes up to optimism, and the story continues. So this is the yo-yo of the shipping market and the way it goes, right? So the regulatory environment we already talked about. So I am not going to discuss too much again. This is your 1 hour. So I think we are doing well. Because I want to stop 20 minutes before to have question and answers. So I'll take another 35 minutes and then let's have question and answers. That's I want to learn from everyone's ideas and discuss. So impact of the shipping, which is the International Financial Reporting Standard 16 on leases, which I mentioned already to you. So if somebody acts very smart and he says they'll have only 1 year contract, but I'll give you an option after 11 months, you can extend it for another year. No, the regulators are smart. Okay, so they won't allow you to do that. It still has to go onto your balance sheet as part of the financial lease. So in future, all leases shall be considered in the same manner as is specified there. But again, some jurisdictions, like with the Chinese leasing companies, you may still be able to, do a good deal if you're able to convince them. So the impact of these new regulations changes the capital structure, the gearing ratio. Does anyone know what is gearing ratio? Now I'm going to spend 5-7 minutes on that rather than killing you through PowerPoint presentation. So I'm just going to discuss this a bit. Anyone knows what is gearing ratio? Debt equity ratio, right? Everyone knows debt equity ratio. Let's say in a capital structure, it's like a disk. So if you just draw 2 lines in that disk, so it makes 2 segments, right? So one segment is your debt, your liabilities, other segment is your equity. So if debt is more, equity is less, it means your debt equity ratio is more than 1. All right. Let us say, for example, I've got 80% as my debt, 20% as my equity. So my debt equity ratio would be 4. So if it is 4, it means I have to pay a lot of interest on that 80%. Now imagine if the market is bad and I am not able to generate my operating income to pay the debt. I'm in big trouble. I may have very profitable businesses in my book, but I don't have cash. So if you don't have cash, like cargo is king, cash is the king. If you can't pay your liabilities, you're in big trouble. Even if your books are showing fantastic profit. All right, next 10 years, you can say that you're making $500 million US. All right, pay for the bunkers, right? Where's the money to pay for the bunkers? If not, he's going to arrest the ship. And one ship is arrested, your reputation is down. And then everybody gets panicky doing business with you. So it can come down. The pack of cards can collapse very, dominoes can come down very, very quickly. So you've got to be a bit careful about debt equity ratio. Let us say if you're a public listed company, how do you know about the risk? Is because you have these rating companies, like you have CRISIL, Moody's, S&P, Fitch, all these people are there, right? They will rate you. They'll say it's a AA company or AAA company or BBB or BB or CCC, whatever. So you already have that. They do their homework and they will tell you. What happens if you're a private company? Let us say Commodore Bhandarkar is the lender and Ajitji again. Let us say he's a private company. He's gone to him to get money. Now he needs to find out synthetically, some sort of synthetic arrangement should be there. He should be able to calculate whether you're AAA or BBB or CC or C, what you are. Now this again comes from Professor Damodaran's fantastic table which he has made. It's quite an interesting table which I am putting it here. Now what he says is that you must look at the ICR, interest coverage ratio. So he is going to look at what is his operating income. And then he's going to look at how much interest he has to pay. Then he's going to divide his operating income by the interest that he has to pay. So he'll come to a number. So if we can make multiple times as the operating income as compared to the interest that he has to pay, it means even if the market comes down, he won't go belly up, right? So that's very important. Let's say 12.5. This is as per Professor Damodaran's. I've given the link there. And you just type on anyone interested in applied corporate finance, valuation of the companies. If you want to know about Adani, what people have been talking about, all that nonsense which is going, just listen to Professor Damodaran. his valuation of the companies. He's got some 38 videos on applied corporate finance, especially for young people, I would like to say, who are listening. Go to YouTube, type Aswath Damodaran, listen to those in the evening when you sit or before you sleep, listen to 30 minutes, 35 minutes. I did my corporate finance in Cass Business School, hardly reading any books, got 84 out of 100, only listening to Aswath Damodaran. All right, it's absolutely amazing. The valuation of the companies, the risk, how do you look at it, understanding various theorems. It's simply awesome. It's amazing. All right. So here what he says is, if you're generating multiple times more than the interest that you're paying, it means you're a very healthy company. So if you look at the top one, 12.5 is the interest coverage ratio. Your rating is almost like AAA. And higher the rating, less the risk. If less the risk, as a lender, he will not charge so much. He's going to charge much less margin. Of course, if the interest is the base interest is very high, his cost of capital has gone up now because the Fed Reserve and everything has gone up. That interest rate has gone up. But his reward for the risk that he wants will be less because he looks at you as less risk. So his expectation of reward is also less. But if you are somewhere like 2.5 times, the interest coverage ratio is 2.5 times, it means there's a big risk. If the market comes down a bit, you won't be able to pay your liabilities. So there you see, you immediately go down to B2, B, that sort of rating. And if you look there, cost of capital plus 4.75%. So he perceives you as a high risk business, counterparty or credit. So he's going to be asking you for more money. All right. So he has to make two decisions, whether to give money. He may decide, sorry, I'm not doing it. And if he decides yes, for some reason, after doing due diligence, then he would say, how much should I charge? All right. So this is a very important part of the ship finance cost of borrowing. Now let's come to the most important thing which is happening these days. And that is the sustainable financial practices that are being followed, the ESG and the Poseidon principles. So it's all about sustainability. All right. I've got a number of slides here. I can go on for the next 5 hours, but I don't want to do it. So there are a number of slides. I have taken them and put them at the end. If there is time, if people are interested, maybe you can call me again tomorrow. We can do it. All right. I'm just joking. So no, tomorrow is Saturday. So sustainability. All right. So applying ESG. I was talking to my dear friend, Yash, right? Yuvraj. So I was talking to Yuvraj, and something very interesting that Yuvraj mentioned was this. He just talked about the life cycle of a ship. So the life cycle of the ship, what is the starting point? Starting point is the idea. The idea that I want to be a ship owner. Then the thought comes, what type of ship? New or old? Where do I go? What size? All right. So all those things come in. And that is the beginning of your ESG. That's the starting point. The segment, type, size, design, shipyard, compliance with future regulations, flag, your IHM, what is going to go in there, making a list of the hazardous materials, technical specification, what is going to be the total resistance of the ship, hull design, right? You're looking at your frictional resistance, residuary resistance, air resistance. Basically, you would like to do the operational excellence, all right, through that. So all that comes towards your environment. Then comes your people. S is all about people. When we talk about social, is not just about society in general. Society is important. Your seafarers. From shipping perspective, it's your seafarers. S is for, in my opinion, in shipping is seafarers. If we already had ESG before 2020, before COVID came in, our seafarers would not have suffered so much because we didn't have ESG. All right, because we didn't care that what could happen, what could go wrong. And of course, social also comes into paying how much money you pay to your board directors and CEOs and all that. So it's a quite a broader perspective. Then comes your G. G is your governance. Do you have non-executive directors on board, independent directors? Or you're going to doing a lot of shortcuts, cutting corners, just making money, the practices that you follow. So all those things are quite important. So G is for that. All right?
Very important.
Extremely important. Absolutely important. Then you look at your corporate structure, beneficiary ownership. So again, part of the governance. All right. So ESG comes in at the first stage of that idea itself. Then how are you going to get money? From where? Financing. Which banks? The ones who are part of Poseidon Principles, those 34 banks, one of them? Or you'll go to someone who will give you money, irrespective of how do you manage your ships or build your ships. Again, this is all part of that thought process. So that due diligence is required. Then, of course, the decommissioning. When you're thinking about buying the ship, you also have to think about recycling. And that is where IHM comes. All right. At that moment, you have to think after 20 years or 15 years or 25 years, what are you going to do with your ship? Let me tell you, a stage might come that you may have to pay to scrap your ship. Right now, when you do your financial modeling, you put the price at the end. Okay, let's say scrap value of $450 per LDT, and the lightweight is 12,000. So 12,000 multiplied by, let's say, 404. So you got $4.8 million. Then you do the discounted cash flow and all that stuff. But a time might come. I'm not sure whether it will, but it might come that you have to pay to take the ship away. Somebody comes and takes the ship away. All right. So these Poseidon Principles, again, what are these? Can anyone explain? Yuvraj, you would like to say a couple of sentences, or anyone? What are Poseidon Principles?
Based on your environmental performances.
Can you give the mic, please?
So essentially what has happened is there's something called GMF, Global Maritime Forum, who have come together and created Poseidon Principles from the point of view of ship financing, and sea cargo charters for the point of view of chartering. And you as a ship owner, you'll have to create some data sets and submit to them, create essentially the business proposal for them, and how you're going to environmentally friendly conditions and run your vessels under them. And that is the way that you do not get 6% versus 4%. So you get better rate of interest if you present and if you follow practices that are for them.
So basically, can we say that you're aligning the actual operation of the ships with the requirements from IMO? Yeah. You walk the talk. In other words, you have to walk the talk and you have to prove it. And proving is through data. You have to measure it. As they say, if you can't measure it, nothing is going to happen, right? So that's so very important. As he said, that's very important. In 2019, I think 12 banks, they got together and they came with this Poseidon Principles, where you had to give your annual emissions report right to the classification society, and these banks would get it. And slowly, the number of ships has gone up, number of banks has gone up to 34 banks as of today. All right. And the almost more than 50% of the global ship finance belongs to these 34 banks. So it's I think 59, 60% of that, about half a billion dollars, $200 billion of the total amount of money. Yeah, not half a billion, $200 billion, which is more than 70%. So the assessment of climate alignment, accountability, enforcement, and transparency, I think that's the most important part. So there were only 11 signatories in 2019. As of today, there are 34, as I mentioned earlier. And how we are going to transition into the compliance to the green shipping. So this is all an effort towards that. And this needs to be thought about it right in the beginning. So what is the impact on the ship owners? So your AER data is to be shared with banks via new loan covenant. Anyone knows what is covenant? These are your terms and conditions in your financial documents. You've got some positive covenants and negative covenants, all right? So positive covenants are, you will have to do this, you will do this, you will do this, you will do this. If you don't do it, you are in default. And negative covenants are, you will not do this, you will not change the flag, you will not change the ship manager. So if you do it without telling the bank, of course, the approval will not be unreasonably withheld. So, but you have to inform them. So that's the negative covenant. Okay. The most important part is greater liquidity available for new eco-friendly vessels. So by controlling the liquidity, by liquidity means money. So by controlling the money which is available for ship finance, you are goading, you are encouraging or directing the investment towards more eco-friendly ships. And now gradually to those alternate fuel ships or carbon capture ships. Effect on the financiers, of course, they will create alignment with those clients who are following these principles and doing the operational excellence, efficiency excellence. So it encourages greater transparency and accountability, etc. Okay, let's move ahead. And then in December 2021, I think, there are Poseidon principles for marine insurance also. So not just the banks. Now, if you see, you got so many signatories. You got Swiss Re, Guard, Hellenic Hull, like that, a long list. This is as of today morning. All right. This is as of today morning. My previous sheet had 5 missing because these 5 people have came in this year and late last year. Then you got affiliate members and the supporting members. So gradually the underwriters, they are also aligning themselves that the ship owners must follow the requirements and they have to make sure that the reporting is done and they can prove that they're working as much as they can towards the compliance. Then comes your second part of the life cycle. So initially was the idea. The second part is the useful operation. Useful operation is the time when the ship is making money. All right. This is the time when you're chartering the ship and doing that. So the employment. Now in employment, the clients with whom you're doing business with, are they also ESG compliant client? That's very important. Yash, Yuvraj was mentioning, I don't know why I keep remembering Yash. Or Yash, okay, from Gujarat Maritime University. Now, Yuvraj was also talking about that he's got some 60 clients and they have to, all of them have to be in alignment with each other. Yeah, UN Compact sort of thing and with the UN SDGs. That's so very important. Then the anti-corruption policy, which is your MACN, Maritime Anti-Corruption Network, compliant fuel and energy efficiency, commercial operations, sanctions, and financial discipline. So when you're doing employment, all these things are very important. So this ship finance is no more a simple activity of getting money. At every stage, you're going to be checked. And that is what is the contemporary ship finance. What's happening today? This is what is happening today. Then you got your manning. Again, ESG principles, MACN and the ESG principles. My question to the people who are in Manning here is very simple, including the agents. What are we doing to make sure that our boys and girls don't have to pay money to go to the ships? Because that itself is a big, big problem, right? So the maritime anti-corruption, that's very important. ESG principle, that S is very important. Then you got your Manning KPIs, training, emotional intelligence, work environment, and welfare of the people. That sort of training needs to be there. When I talk about emotional intelligence, is far beyond than IQ, far beyond than competency. It is about attitude. It's about empathy. It's about understanding. On the ship, when we hear so-and-so has jumped overboard, or this is a problem, or that is a problem, people don't understand each other. I get calls from the cadets. I'm the ambassador, sea ambassador for ISWAN. All right, I've given cards to some people. So I get call from boys and girls, and they tell me the girl tells me the master is forcing himself upon me. How sad is this? I said, how old is the master? He said, he's 62 from Delhi. It is so sickening. And there's a boy who called me and said that in a party, captain dropped his pants and asked this boy to suck his what? Is this what we are? Is this how we are going to be looking at ESG, the social part? It's terrible. And this is what we need to do right from the beginning, that awareness has to be brought in. All right. Then comes your technical management. Now you got number of suppliers in technical management. So are these suppliers, they are approved service providers, the subcontractors, do they follow these principles or not? The compliance with rules and regulation. In other words, the entire ecosystem has to be such that we all move in the same direction, not only just compliance on the paper, but compliance in here in terms of attitude. Green initiatives like where the charters are involved, Sea Cargo Charter, the SCC, a number of charters have got together. They are preferring those ship owners and they are willing to pay a little bit more to the compliant ship managers. Then you got green initiatives like carbon offsetting, carbon insetting. I think Yuvraj, what he's doing is a fantastic job in many of these areas, the EU ETS and things like that. Maybe one day we should call him to speak about what he's doing and how this is helping the industry to be moving into the green shipping area.
You have given presentation in very same place.
Same place?
Yeah.
I would like to go through that. Okay. Then comes the end of it, which is the green recycling. All right. Just selling the ship and distancing yourself. You give a call to a ship recycler, a cash buyer, and just get rid of the ship. It's still happening and it will happen. But at least initial step we have taken. Hong Kong Convention has been ratified by India. Bangladesh has recently done it. They have got 4 large shipyards. They have done it. India has done it. So that's one very positive step. But the old style, I've sold the ship and I've got nothing to do. I think with IHM and all that, things are changing and they're going to change. Recent examples of courts being willing to look back to the sale transaction. What this means is, if there is a case where it is found that ship is not compliant, they will go back to the entire chain and find out who owned that ship and what was the situation then. All right. And they might hold the former beneficial owner of the ship responsible. Things are changing. Things are changing very, very fast. So due diligence, who's the buyer, how and where the ship is going to be recycled, the audits, it's not just a paper. I'm very happy that in India especially, there are consultants involved from Germany. There are a couple of them who are helping our shipyards to do better. I was recently there in Bombay, attending a couple of seminars, especially the INMEX SMM conference, and I could hear those people talking, and which was very, very interesting. Very, very interesting. The question I asked them was, if we are doing all this, why don't we make people aware of it? You go and type on YouTube, Indian ship recycling, and they will show you such sad state of affair, such pictures over there, the videos over there, that you will feel India is the dustbin of the entire world, which is not a good sign. When we are doing so much and when we are one of the best in the region, we have to bring about that awareness in the minds of people. We have to put those things. And I'm very happy that this suggestion was taken very positively, and we will start working on it. Okay, now we are at 6:30. Before I go to this terminology, if there is any question, or you want me to continue with this little bit? Can? You don't want to ask any question?
No, please continue, or this is anyway.
15 minutes?
Yes.
Yeah, then 15 minutes we'll have questions.
So
Okay.
we extend that 2 hours thing for another 5-10 minutes.
Okay.
With your permission.
Yeah. Normally I just stop after contracted time. All right. So
Pay more.
equity, pay me more. Give me a hug. I just need juppies and puppies when I come here. I don't need anything else.
I don't
Okay.
know that.
Thank you, sir.
No,
So-
your interest rate will be low considering our performance.
Oh. All right, sir. Equity, now everybody knows. That's the money that comes from your pocket. Debt, you take it from the bank. It could be debt capital markets or whatever, which is the debt instrument over here. Debt equity ratio, you know. Collateral, everybody knows. Remember, I talked about security, mortgage, corporate guarantees. So they are collaterals. Covenant, I mentioned terms and conditions, which is like positive covenants, negative covenants. Then you have something called loan to value ratio. Now, this is a very, very important one. Now, let me explain this through an example. Let's say, for example, the ship is costing $50 million, 50. And you are lucky to get, let's say, 70% loan. So 35 million is the loan, 15 million is gone from your pocket, and the market value today is 60 million, 60, right? And LTV is, say, 120%. 120% means the financial document will say that the price of the ship in the market should be 20% more than the loan, outstanding loan. So your outstanding loan is 35 million. 20% more is 7 million. So minimum market value should be 42 million. All right. But let's say it is 60. So banker is happy, no problem. And the owner is happy. He is going to make sure he doesn't default in payment. He doesn't want his ship to be sold at 60 million, right? So definitely not. Let's say the market drops, 2008 December happens, and the ship price becomes, let's say, $30 million. From 60 goes down to 30, 50% gone. Outstanding loan is, say, 35 million. Okay, 35 million. And with LTV of 20%, that is 120%, it should be 42. So how much you're short? 12 million. So what are the options the bank has? Anyone? What are the options? As per the terms and condition, it should be 42 million, but actually the market price is 30 million. So what can the bank do?
Owners, they become owners.
Option is buy, take over the vessel, or take a chance and make the value.
Can you get the Sir Joseph Boli.
Either wait for the value to go up with your calculations, or take over and say,
Debt restructuring.
Debt restructuring. So this is something, Nagaraj, thank you so much, Mr. Shenoy. But the thing is, we always go to the worst case scenarios immediately, right?
Yeah.
So first thing is tell the owner, my dear friend, just reduce the loan. Yeah. Reduce the loan. If it is 30 million is the market value, divide it by 1.2. And what do you get? 30 divided by 1.2, how much do you get? Let's say, for example, 26 million, let's say. So 26 and market value is, his loan is 35. So you say you pay back 9 million, perfectly fine. Everything goes fine with that, right? So that's one way to do it. Second thing is, as Mr. Shenoy mentioned, debt restructuring. You talk to the bank. See, we expect the market to go up. Our record has been very good. We have been good owners. We have been paying you in time. We got good contracts on the table. And even if the market value has come down, our cash flows are not affected because we are making good charter hire, because ships are either put out on time charter or we have voyage charters, COAs, where the charters are performing. So our P&L is perfectly fine. So maybe we can look at some sort of moratorium, or we look at, some sort of debt restructuring order. So there are various ways of looking at it. Sometimes I hear people say, just take over the ship and sell the ship and take your money. Now the same bank may be having 100 ships on their book. They take over one ship and do a distress sale at still a lower price. The overall pricing in the market comes down. So their balance sheet becomes further and further negative. So it's a total disaster. I think shipping is slightly different from other industries in this way, that we are very pragmatic. We will look at every case on the facts of the case, what is happening, why it is happening, what should be done. Ultimately, the bank has to look at its bottom line and not spoil the relationships. All right, they have to maintain. And this is exactly what happened with Eagle Bulk and other people. When the markets came down, they were in a situation where banks agreed to restructure, to have moratorium. They delayed the interest payment, they delayed the loan repayment. So all those things do happen. All right. So immediately we will not go to a situation where you take the poor guy's pants off. So that shouldn't happen. All right. So margin on lending or the spreads we discussed in detail, giving you example of Dr. Damodaran and that synthetic rating of the ships. Then floating fixed rates and interest rate swaps. Sometimes the owners say that we are not in a business of playing around with the interest rate, just give us the fixed rate. So interest rate swap is that you sell the floating and buy the fixed. So what you're doing, you're locking in your interest rate. But again, it depends on different companies, how they look at it. All right. If the interest rate is high and you go ahead and sell the floating and buy the fixed, and then the interest rate comes down by 50% or 60%, and you intend to sell the ship, the loss that the bank is going to charge you could run into $1 million from the interest rate swap. Practical example. I have been through it. All right. So you got to be a little bit careful about what you do with IRS interest rate swaps. A term that you will hear very often is called the debt servicing. Debt servicing is nothing but paying the interest on the debt, servicing your debt. Mortgage charge over asset, we talked about, that's the ship mortgage, and the mortgage needs to be registered, right? The lender has a charge over the asset and it is to be registered. And anyone can find out from the flag who is the person who is the mortgagor. Then SPV talked about, so that the liability doesn't go from one ship to the other. Euro dollar market is where you're dealing in US dollars outside the US. All right. So that's the different market we talk about. Then there is something called arrangement fee. If you're going to the bank, you're making arrangement for the loan, they will charge you some 0.25%, 0.5%, 0.75%, depending on your relationship. Then there's something called commitment fee. This is very interesting fee. Here, let's say they'll say, oh, Mr. Marker, we Okay, we agree to give you 50 million. We know after 2 months we have to pay that. But we have to keep this 50 million unemployed with us in the bank, because when you need it, it should be with us. So you have to compensate us for the loss of opportunity. So you may again have to pay some 0.5% or 1%. So again, question of negotiation. Prepayment fee is the business of the banks or the lenders to lend you money, and you pay in advance, just like your home loan. You pay in advance, then there is some sort of liquidated damages or predefined. We in shipping, not only shipping, in any commercial contract, we don't use the word like penalty. Yeah, it's not a criminal thing, so we don't call it penalty. So you need to pay, compensate for the loss of opportunity. Then you got tie-in or the Shikumi-sen deals. This is for some other day, I will leave it. This is the Japan Inc. sort of thing. Then capital adequacy, these are the rules, Basel rules we talk about. And even RBI talks about capital adequacy. If the bank is giving loan, they should have adequate amount of capital with themselves in case of emergencies. Risk versus reward, we talked about it. Higher the risk, expectation of reward would be high. Is risk actual or is this a perception? Anyone?
It's a perception. It's perception.
So risk is perception. Because the time when you are negotiating it, that time it may happen, may not happen. So how you perceive it. So when we say shipping is a very risky business, it's a perception that shipping is a very risky business. Okay. So that's fine. All right. So let's quickly look at this case study. So the owner's decision making. First, of course, you decide on your type, size, age of the ship, expertise, employment, management, how you're going to look at the ship. Then you do your cash flow analysis, validity of the assumptions made. All right, I'm going to tell you some very interesting things out of it. Then the stress testing comes in, sensitivity analysis comes in, that every change in $100 per day, what would be the effect on your internal rate of return or on your net present value rather. All right. Then choice of financing. Is there a choice? First question is, will someone give you money? That's the most important part. If yes, why? If no, why? You have to do the evaluation. Then do you have an existing relationship with the bank? Maybe you are a large chaebol or zaibatsu, like, or conglomerate. You are in many different businesses, but not in shipping. So you want to get into shipping, and you have existing relationship with banks. So that will help you to get the interest loan from the bank. Then comes all your covenants and all those things, offer terms, arrangement, commitment, prepayment, what collaterals are required, and the IRS, as we discussed. Then the process comes in, like the choice of flag, class, choice of technical manager. Are you going to do it in-house or third party? Choice of shipyard or specification, that also comes in. If it's the second,
Yeah, good evening, gentlemen. I think we have lost the connectivity. Am I audible?
Yes, sir.
Yes, sir, you are.
Yeah, Mr. Shinoy, now you have become the basically host. I think you have to make Mr. Jagmeet Makkar co-host if he is
Okay.
there.
Okay, sir. Okay.
It seems he is not there. He was seen few minutes ago, but at present he is not there. But you are the basically now host. So you
Oh, I
have
don't
the
know how. I don't know how this happens, sir. Let me try.
so this you are the natural choice of Mr. Makkar. That is why.
Oh, sir.
Anyway, this automatic happened. So the basically
No,
the command of this platform is at your hand now.
but he is not there, sir. I don't
He is
see
not
him.
there. So let's wait. Let him come, or you can make Mr. Arun.
Arun,
Mr.
okay, sir.
Yeah, Mr. Arun is actually I think he is a host.
I'll make him host. I made him host, sir.
Yeah, okay, that is good. So I think Mr. Arun will be able to handle.
Sir, one query in between.
Yeah.
This is such a useful one. I saw by my mistake. I
Yeah.
couldn't join initially. I lost it. So, is there a chance that we would get this PPT of what sir is presenting?
I'm not sure. I will try to contact him. Okay, Mr. Jagmeet Makkar, if he is really interested, he would be giving you the slides or not slides exactly, maybe notes in the form of notes. We'll request.
That is one thing, sir. Thanks very much. And secondly, I think you are recording it, so we'll be able to see this recording somewhere.
I think the recording would be available in the YouTube.
Okay, sir. When will this be? By
I am not sure. Again, we have to go back to Chandigarh chapter.
Okay, sir.
Okay.
Thanks very much.
Basically,
Thank
I am all like guest like you.
you. Oh, yes, sir.
Okay.
Okay, sir. Okay,
Right.
thanks.
Yeah, Mr. Arun, can you hear us? Or can you hear me? Yeah, Mr. Arun.
Sir, we can hear you, sir.
Mr. Arun, can he? Yeah, Mr. Arun, please respond. I think you are the basically, we got a mail from your this thing only, if you are same Arun.
Mr. Arun is on mute.
Well, he is a Chandigarh chapter chairman, Mr. Arun. That is why I'm trying to basically contact him. Unfortunately, I don't have his number.
Sir, are we still connected?
I don't think they are going to connect us. Because I tried to contact Mr. Arun Kumar Agarwal. His phone is also coming engaged.
Okay, sir. Okay.
So I think it's not that time. That now time is also gone. It's already 7 o'clock.
Yes, sir. Yes, sir.
Right.
Yes, sir. So we'll
I
wait
think
for
we'll
few
log
moments.
out. As
Log out.
Mr. Sinha, you are saying that Zoom session is out now. Zoom session is still going on because we are talking in the Zoom session itself. So it is not basically due to the Zoom session. It has got something to do with that they got disconnected from Zoom.
उधर का power
Or
वगैरह गया होगा.
they may be that power
Power
shortage or your internet basically.
Now, why I said Zoom, sir, sometimes I've seen some people other than
Yes,
this.
that the Zoom free Zoom is only limited to 45 minutes.
Correct. And
So
sometimes some people subscribe to that 1 hour, 45 minutes or something. I thought maybe that was one of the reasons.
no, the free one is basically 45 minutes.
Yes, sir. Yes, sir.
And then there is another package one. So that is depends on how much you want.
Correct, sir. Correct, sir. Correct. So this has been a very useful session, sir.
Yes, I found also quite interesting part of it.
Yeah, yeah.
Okay, so I'll request Mr. Jagmeet Makkar to basically share his.
Yeah, because very useful and very informative and educative. I actually had to ask him 2-3 questions, especially the ESG part, because see, it is all fine to say you have to have ESG and all this and all that, but all this is increasing the cost outlay for the owner, sir. You see, for everything that somebody comes out with a new complaint, the owner has to shell out more than what he had to do before, and
Agreed.
that reduces his bottom line, which means if now you are the banks also say no, unless you follow ESG, I will not give you financing. Already the others, insurance and all, are started saying, okay, if you don't do ESG, now if I do it ESG, my outlay will be more, my bottom line will be less. Then how am I going to pay you all those interest that you have charged me for your insurance?
So that is what is the business model in your business proposal. That is where you have to discount for all the not only the present regulatory requirement ESG what is coming into that, also in case any near future with the new regulation is going to come, you have to discount that also. So
Sir,
for example, your
uska
many
beech mein
flags not yet ratified your Hong Kong Convention. Right.
Correct.
So you are after 2 years or after 1 year, basically exactly 20 months, it is going to come. So that has to come. That also has to be discounted today itself.
And sir, उसका बीच में कोविड जैसा एक आउट ऑफ सिलेबस आ गया तो बस पूरा खत्म सर.
But that is again, so with the COVID, it's unexpected thing. That is another basically big risk which you also have to be ready in your business model. You have to have some sort of basically this uncertainty, okay, also to be discounted for.
Sir, एक और चीज है. See, it is very nice and romantic to say it a business of shipping is very cyclical. Sine wave जैसा follow करता है और आता है. But the point is उसका width कितना है? कब तक वापस आ
What is
जाएगा?
the cycle? It's like generally I say it is very easy to do the post-mortem, right? But when you are in the basically middle of the cycle, how do you know it is going to go up or it is going to go down?
That is what, and how long the cycle will be.
So that is what is the risk element, what you have to think. So that is what is the risk, what he is basically trying to explain. When you are today's scenario, you don't know what is going to happen tomorrow.
Sir,
so only you can assess, only you can perceive. And for that risk, whatever you perceive, you should be very much ready.
Correct.
So all the stakeholders in this scenario, they would be basically finding different risks. So everybody would be exchanging their notes.
उसका बीच में sir, somebody else comes out with another romantic idea like ESG plus something more. बस खत्म. वो भी compliance के लिए वापस उसके लिए भी बीच में. So I think certain practicality is very much required. GHG, EHG वगैरह पूरा चालू करके, it is nice, Yes, I am also very environment friendly person, and I also want the environment to be this and ESG to be there and all that. But when you go on adding all this, it becomes more and more and more and more challenging for the ship owner.
And your profit margin keeps on reducing.
Reducing, if at all there is one. I mean, रोज नया नया
Anyway,
नया
Mr.
नया नया
Shinoy, you are working in which area?
नहीं sir, presently I'm just teaching in MMTI in Andheri, sir.
Okay, MMTI in Andheri.
Andheri. And I'm doing my independent director course. So
Okay.
इसके लिए मुझे ये सब थोड़ा
Correct. Chalo, nice seeing you in this platform. Thank you. Bye.
Yeah,
Enjoy
okay,
your
sir.
weekend. Right?
You
Bye.
too, sir. You too, sir.
Thanks.
Bye.